You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. The Option Block is brought to you by Options House, a powerful, easy-to-use, and intuitive online trading platform that's not only fast and reliable, but comes with dedicated customer service and a great trading experience. Trade on the platform that's top-rated by Barron's and Stockbrokers.com. With completely transparent, value-oriented pricing, Options House is your all-in-one solution for options, futures, and stock trading. Plus, open and fund a new account at optionshouse.com/insider today and trade commission-free for 60 days. Options House is a member of FINRA, SIPC, and NFA. And now, get ready to hit the option block.
All right, everybody. That rockin' tune means it's time once again for a little show we like to call around here, the Option Block, your bi-weekly source for all things options related. A little bit of options wit, a little bit of options wisdom, some analysis, some education, a sprinkling of unusual activity, throw on some strategery, some of your questions appear into the future. You mix it all together, you have the tasty, tasty cocktail. That is the Option Block. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-expanding, ever-exciting Options Insider Radio Network. 15 programs for you guys to sink your teeth, or perhaps more literally your ears, into, including 500-plus archived episodes of this fine program. Where can you find all of that goodness? Well, the easiest place, of course, the mothership, the flagship, theoptionsinsider.com. While you're there, click on a few articles, too. We got some good text for some reading up there as well. Don't plug that enough around the shows, but a lot of stuff you can do there. Spend some serious time over there on the site if you are so inclined. Of course, if you just want to mainline the audio, you can also find it at iTunes, TuneIn, Stitcher, pretty much everywhere you find your favorite programs, including via the App Store, via our mobile app available for iOS, Android, and the beloved Fire OS. All right, and of course, no matter how you get the show, streaming, downloading, or of course, I forgot to mention, streaming us live here via Mixlr, MIXLR, streaming every Monday and Thursday, 3 p.m. Central, 4 p.m. Eastern. We'd love to see you in there with your questions, your comments, your pearls of wisdom. And no matter how you get the show, we want to hear from you guys. Hit us up. You guys are really the reason we do the show at the end of the day. So we want to hear from you guys. And joining me on the old program, let's go in order of proximity. I think I can figure it out this time. It's pretty easy. Let's start the way out in the coast of Maine to a little fishing hut on the coast of Maine where we find the rock lobster himself, Mr. Andrew Giovinazzi, from a thing we like to call Option Pit. Mr. Rock Lobster, welcome back to the program, sir. How was your grand vacation?
My grand vacation was pretty fantastic. I saw massive fish jumping out of the water, but I caught nothing, which is why they call it fishing and not catching.
Where did you go?
Just in my front yard.
Oh, well, there you go. So vacation. It was a vacation to the front yard, a staycation, as the kids call it these days. And joining us a little bit closer to home, as we narrow that radius ever so tightly, we stop by that little provincial hamlet known as St. Charles, Illinois, where we are joined by Uncle Mike Tosaw from RCM Wealth Advisors. Uncle Mike, welcome back to the program, to you as well.
Always happy to be here. Every day is a staycation when you live in such a beautiful place such as St. Charles or Maine. Am I right?
That's true. I think I've literally never known you to leave, except for the few times you've done the show live with us. Is that really the only time you've ever left St. Charles, I think?
I don't see any other reason why I would.
Why would you leave paradise on earth? Speaking of paradise on earth, I'm in it right now in the Options Insider Studios, where I am joined by none other than Mr. Todd Rich, the president over there at Options Monster Media. Mr. Rich, welcome back to the program, sir. It has been too long. Steve's been hogging your chair over there.
Indeed, he has. I'm glad to be back. It's good to be here. Andrew, I think you need to stock the ocean in front of your house.
Yeah, see to that, sir.
I just need better bait. I was a little slow and lazy on it.
Well, as we delve into all things fishing, let's keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. Like the man said, this is indeed the portion of the program where we break down what was moving, what was shaking, what caught our eye in today's broad market activity. And as you might expect, moving on into the summer doldrums, the quiet period of the old market, and not a heck of a lot really lighting it up on the old street. Most of the major indices closing essentially unched on the day, down slightly. Good old VIX cash ticking up a wee bit, but still well south of that all-important 12 handle, hovering right around 11.5 as we're going right out after the close, actually, here, Central Time. And, of course, not a lot of range out there as well. S&P had looks like about an 8-handle range out there today. So, Todd, I guess the moral of the story, we'll start with you. We'll go in reverse. Right as Todd was about to take a sip of his beverage, I got him. It was a good one. But the only man I know who drinks hot coffee before the show. Which is, to each their own. But Todd, I know today, such an action-packed day. I know things were just lighting up and popping off over there in all things Options Monster. Is that the case?
The reason I'm drinking coffee, and it's kind of nice that you called my name out and surprised me, because otherwise I might have fallen asleep. It is. We are, Sirius the dog is rising in the sky, and we are hitting the dog days of summer. Quiet, not a lot of activity. A little bit of action around some of the names where there's the earnings cycle. We've got a little bit left here, not a lot. I'm sure we'll discuss a few of those names that are coming up this week. But after that, I'd expect to see just about nothing for the next few weeks. The Fed is not meeting in August. It is August. The earnings cycle's over, and I don't know if the storm passed, or if we're in the eye of the storm. Right here, we had all that Brexit craziness at the beginning of the summer, and now we're sitting right here, real eerily quiet, and with the November elections coming our way. Who knows what's to come, but it is certainly, there's not a lot going on.
It is quite literally the calm before the storm here. Most of the market, at least the professional side, heads to the south of France or somewhere else warm, somewhere a little more exotic than Andrew's front yard for their vacation in the August time frame. We don't see a lot of size. Markets are pretty thin. That sometimes could translate to a little bit of range out there because they're thin. They're going to gap around a little bit. We didn't really see that so much today. But then again, just look to the calendar last year to see what can happen in a quiet August, right, Todd, where all of a sudden you can be surprised by something happening out there. I think it was a little August 24th that woke everyone up to the fact that, hey, August is actually, it exists. It's a trading month. You don't just go away on vacation, right?
To what are you referring?
I don't know. It's just some weird, I think it was a couple days after my birthday, that's what that was. So everyone was celebrating, and they were just in the haze of the fog of celebration. And they really weren't, didn't know what the heck was going on out there. Speaking of doesn't know what's going on, it's not him, but we'll toss to him anyway. Uncle Mike, reverse proximity order. A lot of things popping off and all the names you love to watch. I think Apple moved, a whopping, actually, I thought it was 3 cents. It was 83 cents. That's a little bit better than nothing. So about 0.8% or so. Not a heck of a lot cooking in your other necks of the woods. But that said, what caught your eye in today's activity, sir?
Well, yeah, a couple things. Apple did have a little bit of a pop today. But the only other thing that I'm really seeing that had any movement of any significance was oil and the oil stocks. Seeing XLE up a little over 1%, oil up about a little over 1%. And so other than that, I would say this is kind of the dog day. I would agree and say we are in the dog days of summer, the calm before the storm. But is there going to be a storm, and when's it going to be? We'll see. But I think the big story that didn't happen today, obviously, it was just non-farm last week, and how the market liked what it saw. Didn't like it extreme amounts. I mean, we weren't up 4% by any means, but it was definitely a little bit of a pop. And the bulls appear to be in control and just maybe taking a day off for today. And if I were to go on vacation to ever leave St. Charles, I would go to Andrew's front yard.
Who wouldn't? Just the other Mecca outside of St. Charles, of course, and the original Mecca itself. But let's look at. I know you've been blasting out a lot of those 35 puts. Were they September, I believe, out there in XLE? Have you rolled any of those? What's the latest status of the great XLE put blast?
I'm still just buy and hold XLE. We got in, the most recent buy-in was back in January around the 60 level and just sitting on it for now. Like I've said before, I have a hard time believing we're going to be paying $2 for gas 5 years from now. And I think that even though there's a lot of reason to believe maybe in the near term that oil may go up, it may go down, but I think that buying oil or oil stocks, anything slippery for that matter, over the course of the next 5 years, I think that's a wonderful time frame at this point.
All right, Mr. Lobster, again, in reverse order now, we get back out to the Duchy of Maine. What was catching your eye, and what, if anything, was lighting it up in the pit chat today?
That is an excellent question, because almost nothing was lighting it up.
A lot of silence, a lot of just question marks floating through the pit chat today. Quiet chat.
You know what? The one thing we did look at, we did come up with a slightly interesting trade in the Vol products. Just because VXX, I think the split was today, so it will go like the XD was today, so you'll get issued the lower or the new shares tomorrow for VXX. It's 4-for-1. But the continual run of the long vol products just keep kind of getting smoked out. This is when they do really poorly. They're long lots of futures, and just when VIX can't get off the ground, they do really, they underperform quite magnificently. So the short vol products doing well. How long it's going to go on, I don't know, which is why we hedge a little bit of the exposure. But that is really, and besides Mike saying, just I saw like natural gas, liquid natural gas. Are we going to start exporting that stuff anytime soon, or what the deal is? I think it's also another symptom. Okay, you've got the market at an all-time high, or today wasn't an all-time high, but it was pretty close. And folks are going to start looking around for names that are still lagging. The financials are doing better, but they're still can't get off the interest rate floor, which is understandable. Like Mike said, XLE, XOP is another one. It's a little more speculative. That one is still kind of in the dirt. It's recovered from its lows. Basically, it looks like it's about the place where it was last year, I'm going to say. When it traded at 30, I don't know, $38 or something like that. So, I mean, a lot of these things are still down quite a bit. Will oil recover at some point? Most likely. And the only thing I can think of is that, okay, whatever the monetary silliness is still, people have gotten used to it. Although the funny thing is, the Bank of Japan not doing so much, I guess. Although now they've got some big fiscal stimulus, the next Abenomics thing. And the market loves all that stuff, keep pumping it up. And I mean, at some point it's going to stop, but it's just for right now, the trend when there's all this friendliness from monetary policy and fiscal policy is up. And over the last 6 years or so, I mean, you fight that and you lose. So I'm not in the mood to fight it. So we just watch it climb and climb and climb and try to find the best, hedging scenario when possible. But there's still plenty of cheap stocks, which is a good thing.
Speaking of cheaper, perhaps maybe about to become cheaper names. So we've talked about this one a few times here on the show. It's kind of the scandal du jour out here in the markets these days. If you want a clickbait headline or you want something scandalous to talk about, you don't want just hype like Tesla or something like that. Everyone turns to Valeant. They, of course, have earnings coming out before the bell tomorrow. So hopefully, if you are going to trade the options on Valeant, have the earnings, you got whatever you wanted to put on in already, because a little bit too late now. But yeah, it's been interesting to watch. I know the Journal, amongst others, were writing it up, talking to our friends over there at Trade Alert. They've been talking a lot of options open interest of late. So good for those guys. And they were pointing out that the strike du jour out there is clearly right now, ironically, not in the weeklies that expire this week. So not the August 12th weeklies, but actually the August 19th. There's about 27,000 of the Aug 15 puts open. I can't imagine those are all straight up buys. Maybe someone drawing a nice line in the sand. They're trading today right about 12, 13 cents out there. About 3,000 of those going up again today. They've been pricing in. It looks like they're pricing in about a $3 straddle going into tomorrow, which is about a little over 13%. I don't know, Todd, this thing generates a lot of headlines. And today, of course, doing decent paper, about 125,000 contracts. I don't know how much actual paper it does. Did any of your Option Monster clientele over there, are they devotees of all things Valeant? And what's your take on kind of the put frenzy we're seeing, as well as the fair amount of juice, 13%. It's pretty rich out there we're seeing out there in Valeant land.
One of the things, that we tend to, when we're talking to our customers, a lot of times we try to avoid these earnings scenarios. It is amazing how well the market prices in risk. And it's a very efficient mechanism for trying to determine what's going to happen. And a 13% gap, $3, a little bit more than $3, I believe, at the front month at the money straddle in Valeant. That's pretty rich for a $22.50 stock. And it's just one of those things where, unless you really have an axe to grind, it's one of those things where we prefer to tell people to just stay away. But to me, that is really, if people are wondering what's going on in the markets, that right there is the story of the markets. Very, very quiet, nothing really going on, not seeing a lot of big moves. Oil, certainly an interesting story, but in the individual equity names, it's all news related. It's all around those earnings cycles. It's all paying attention to when those earnings are coming up, what the market might be expecting. The market does price this stuff in pretty well. And, there's other earnings, big names coming out this week. And Valeant's got a front month at the money straddle a little north of $3 on a $22 stock. I find in the dead days of summer, when people are out spending money, taking vacation, traveling on low cost of gasoline, this Friday we've got retail sales coming out, and are people spending the money? Are people spending it out there? Are Americans out there enjoying themselves? Clearly with cheap cash, you can go all over the place. And there is a name this week. Disney has their earnings coming out. Definitely sort of in that retail space, along with all their entertainment properties. And the odd thing is that's a $95 stock, $96 stock, and their front month at the money straddle before earnings is also about $3. So it's just kind of comical that, Valeant, they're looking for 10, 15% move, and Disney, they're, pricing in risk of maybe a 2 or 3%. It's kind of but that's just the way the markets are right now.
That's, your difference between your massive global conglomerate that pretty much has a finger in just about every pie on the planet. Most of them pretty profitable, I should say, with the exception maybe of ESPN looking down the road a little bit, versus a crazy pharmaceutical name that could vacillate, 50% on some crazy announcement tomorrow. By the way, while we're talking, I did dig up, looks like some of those AUG 15 puts expiring on the 19th. Looks like a bunch of them went up back on the 1st. And it looks like I was thinking, a lot of them were paper selling, hitting the bid on those 20 cents or so. Though a big chunk did go up marked spread as well. So I don't see where the other link, about 11,000 or more going up marked spread. So and plus some of the smaller size as well. So I'm not sure where the other leg was. Maybe we'll have the chance to dig into that. I don't know, Mr. Rocklobs, before we head on out of the trading block, anything in the pit chat lighten it up about Valeant or maybe any other names lurking out there? I know these guys, your guys in that pit chat like to chat about some of the crazier ones out there sometimes.
I did. We looked at Valeant for, didn't look like very interesting pricing. We've basically been following that stock the whole way down. We did one ratio put spread in it, I think, that worked out okay. But other than that, we pretty much just avoided it because the story never gets better. No matter what happens, it just goes lower. So I'm glad I don't own a bunch of it. But at some point, it feels like it's going to stop going down. But my gosh, it just doesn't do that. I did see one little extra story, though, about Buffett exiting credit derivatives.
Oh, our old friend Buffett. Yeah, whenever he touches anything derivative, it does seem to make a headline, does it not?
It does. And what's funny is I think, because he generally likes to sell things when they're expensive and buy them when they're cheap. And when he's trying to close all his, and it looks like the story was he's closing some open contracts. So him closing open contracts just basically means he doesn't see a lot of edge in selling insurance at this level. So I think that's what this is saying. So just, note to self, if Warren Buffett's taking all his stuff off the table, that, everybody should, he's probably early like he usually is, but he usually ends up being pretty right sooner or later. Last time I looked, anyway.
Yeah, he's got a little bit of a track record. I know this one caught your eye as well, Uncle Mike. What do you think about our friend Mr. Buffett, who likes to play out of both sides of his mouth, likes to slam them, infamously calling them financial weapons of mass destruction, but he's been shown to not be averse to using them whenever it suits his purposes, sir.
Yeah, that's one thing that it kind of irks me about him, what he's doing. I mean, I don't know if I've ever really heard him say anything good about derivatives whenever he's been asked about them. Maybe he has, I don't know, but he does seem to be quite a bit on the bandwagon against them, but yet he does them himself, and that irks me. If you're going to like derivatives, or if you're going to hate derivatives, hate them, but don't, as you put it, talk out both sides of your mouth. And then the other thing here that I do find kind of interesting is the fact that this is a pretty decent sized position. Just because of the fact that even though it is a Berkshire Hathaway Buffett-sized position, this is some pretty serious paper. He's not just doing this in his $20,000 trading account. This is pretty serious stuff that he's doing. So, I mean, if for these kind of contract values, then he really shouldn't be slamming the derivative market.
Of course, and he infamously wrote those puts on Goldman and others and was paid a hefty above-market premium to do that. So wish we all could command such hefty premiums. It would make selling premiums so much easier in that regard. I know, Todd, I can see your ears perking up over there. What do you think on Mr. Buffett and his infamous financial weapons of mass destruction?
I like the term. I'm still trying to figure out, I don't think he's I know he's been very vocal against the products, and but he's made a lot of money using them as an asset class. I'm just kind of curious, is he exiting the position now because he just doesn't, the risk reward isn't there in terms of the premiums that he can collect, or is he making a broader statement about the market and the uncertainty that he sees coming up? And he just does, you can't, Berkshire Hathaway is a very large organization. They got positions all over the place, and clearly he's net long the market a lot. They own a lot of companies, but if you wanted to thin out some of your risk, how do you do so? And this is clearly a place where you can take some of that exposure out, because there's a lot of unknowns coming up. So
take
it for what it's worth.
Certainly for him too, for that company, anytime they use them, there's the added PR risk and everything else that comes along with it, the regulatory risk. They got dinged a few times by the SEC for the way they reported that exposure. It was a pretty big deal for quite a while. They're coming on the heels of the big financial meltdown 2008. So they've had their pros and cons. They've certainly done well with them financially. I think that kind of wipes away all the other risks. But maybe if it's time to unwind these and move on for a lot of reasons funds at Buffett land that you and I perhaps wouldn't have. Oh, maybe I shouldn't speak for you. Maybe not. Just for me. All right. Let's keep on rolling, though. Since we're talking unwinding and all sorts of interesting activity, let's dive right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody. That funky tune means it's time once again for the Odd Block. The portion of the show where we don our fedoras and our trench coats. You should see Todd and I here in the studio. We look pretty snazzy, actually, with our official gear here as we prepare to enter the dark alleys of the options market. Yes, it's time for the Odd Block, and let's kick things off. I'm trying to think, Mr. Rock Lobster. I don't think we've ever gone down this particularly scary dark alley before. You know it's scary when we're talking Tupperware, sir, right? Nothing scarier than a Tupperware party.
I thought I didn't know how to really frighten the listeners more than saying there's Tupperware. There's a trade in Tupperware that is so bizarre. It's not a bizarre trade on itself, but why you would do it in Tupperware is absolutely beyond my comprehension. Yet, there it was. I actually had to model it for some option pit folks today because
it was that head scratching. You had to just break it down.
Yes.
When you were had squeezed it in between Valeant and Buffett, you squeezed in some Tupperware. Let's get to exactly what caught the Rock Lobster's attention and or ire. I guess I'm talking Tupperware Brands, ticker symbol TUP. I don't believe we've ever delved into this particular ticker before, so maybe an Odd Block newcomer. Maybe sometime in the dark ether 4 or 5 years ago, perhaps we did. Somewhere in the below 100 level shows, maybe we did, but certainly not in the recent memory. This one closing, like I said, ticker symbol TUP, TUP, closing about 64.5, up about 1% or so on the day. It's something that does a whopping 806 contracts, Todd. So this one just lights it up over there, just lighting up a daily basis. Today, doing a little bit more than that, doing about 4,500, about 10 to 1 puts over calls. That should give you some inkling of what caught our eye out here. And of that, like I said, of that 4,500 or so contracts, 4,039 coming in the OC. 65 puts. It's 65, so those are half a buck in the money puts right now, listeners. Paper coming out, looks like they were blasting away a big chunk of 4,000 for $4.10. Actually went up in 2 chunks over there on the ARCA. Marked to spread. Looks like the spread side was stock and went up delta neutral because there were no other option legs going on. No other contracts of any size really traded today except for that. About 250,000 shares went up. Looks like it's going to be delta neutral play. So someone, Mr. Rock Lobster, coming out deciding they're looking to harvest a little bit of vol, looking to do it delta neutral, and they're looking to do it 50 cents in the money. And like you said, they choose good old Tupperware Brands to do just that. This is the name that's had an interesting year or so. It's kind of playing at the upper end of its recent range, but it has flirted with some pretty aggressive lows from here, about back in the market's nadir of January, early February. This thing was printing around $43, so this thing could easily have another 20 handles to the downside if it were to retest those lows. Of course, recent earnings have been pretty good. It gapped up from about the high 50s into the low 60s just on the most recent earnings a couple of weeks ago. So this thing has had a decent upside trajectory here, Mr. Rock Lobster, and our friend saying he wants to do some delta neutral puts. What's your thought here, and what did your pit chatters think about this trade?
I mean, delta neutral puts in Tupperware. Where do you go with that?
Yeah, just saying it out loud sounds kind of crazy, doesn't it?
You're paying $7 for the Ox straddle. Now, I'm not saying it can't work, because we've seen weirder things, right? We've seen trades that on the face of it look like no way that this is working, right? Something would have to happen totally out of category. So, my thought is maybe it's a stock replacement. If they were short Tupperware and they're covering the short and they're buying puts, okay, maybe. But this is really weird. It's like, I don't know, but I think it's somebody's going to take this company over. I know it sounds weird. I just think somebody is trying to be really cagey and trying to hide the fact that they want some kind of takeover. I don't even know how much money they make of takeover premium because they're spending $7 for the straddle. It smells all kind of weird to me. They paid right up to the offer. They got a better deal on the stock, but it's the way it was priced looks buy. So I got to think, why the heck would you buy that thing?
Yeah, actually, I think I might have said sell before, but it was indeed a buy. They lifted the offer. These things were at $410, and they paid $410. So they wanted to get these bad boys going. Todd, I see your ears perking up over there. What does your option monster media hat tell you about these puts, sir?
I'm going to go with Andrew. That is an odd trade, and the more I look at it, I don't think they're trying to go long. This to me looks like someone who was short this stock all the way up and finally had to bite the bullet, and they're running out of cash. They're getting hammered, so they had to buy their stock back, but they wanted to keep that short position, and obviously they can get the leverage. You buy back 250,000 shares and take a short position on, essentially 400,000 shares, but at a 50 delta. You're looking at 200,000 shares of a short position, and maybe they're just trying to get their money back. But that is a bizarre trade. It's either someone being forced out or someone knows something.
I agree with Todd on that.
You can always tell a genius, right? He thinks exactly like you, right? Isn't that the old saying?
Everyone. Well, ever since everybody worries about an option pit, when Mark and I agree on something, they worry. So we don't look at it anymore.
I'm not sure if it's great minds think alike or if it's fools seldom differ, but it's one of those two.
It's one of the two. One of the two.
The difference there. Speaking of splitting that difference, we're going to split between the other names we're about to talk to, because I think, Mr. Rocklop, so you have a very special extra bonus odd block for us here today. It's about some fruit company I'm not familiar with. I think you pronounce that Apool. I believe it's French.
I like Apool.
Oh, Apool. I'm sorry, I had the accent on the wrong syllable.
Now, all I'm going to say with this trade is I'm 99% sure, because I was checking out with Henry or watching the flow go by. I think this client has done this before. I'm pretty sure it's not what's coming out of the strategy block from Tosaw. However, opening paper, all I can see is this paper. There could be something against it somewhere else, but I don't see it linked anywhere. Somebody sold for this week, the August 12-13 call spread, 112-113 call spread. And for all you yield hounds out there, guess how much they took in for the spread?
I'm looking at this thing right now. I'm just looking at the prices, and I'm chuckling to myself. I don't know if I even want to know what the hell they sold this thing for.
I don't even want to tell the listening public.
Did they get a whopping 2 cents for this? 3 cents? Am I being optimistic?
No, a penny.
Don't tell me these things. Don't tell our listeners these things. We're giving them bad ideas.
What's a penny on 7,500 contracts? Is that 70? That's only $7,500, right?
Shows what you guys know. Whoever that trader is, he's going to be up a penny here real soon. Easy money.
It is the ease. But what's funny is I wanted to juxtapose this Warren Buffett's like, well, we're closing all our derivative books because there's no juice. And then somebody comes.
Some idiot comes out and blasts these out. Yeah, there's not even any open. There's no argument that he's closing there. There's 17,000 by 16,000 looks like a total on these strikes today. So could be some others piling in after the fact saying, hey, that's good premium. I want to get that too.
50% annualized rate of return. You do that every week.
I don't know, Todd. I'm guessing this is not a strategy that you folks would encourage blasting out. I mean, the commissions would be nice, but I don't think you want a lot of this paper going up over there on your I'm just going to speak for you on that. I don't think that's the case, right? Am I too far afield on that?
No, I'll just another one of these bizarro trades that you just can't figure out.
We do call it the odd block for a reason. This kind of brings to mind, Andrew. I remember back in my last few years in Intel out there before I left the SIBO. Intel was still rocking and rolling quite a bit, and we had just finished up our earnings, I believe, maybe the day before. So this was now expiration Friday. We were closing up. It was a pretty quiet day in Intel, but Microsoft had earnings after the bell. on Expiration Friday, which is kind of a bit of a rare event, so you expect some movement after the fact. And Microsoft at the time and Intel moved pretty close to each other. They were kind of in lockstep a lot. So if Microsoft caught a bid, Intel would surely in the after hours and vice versa. And a bid came in our book for, I forgot whatever handle we were trading around at the time. I think Intel was probably in the 60s, maybe, or 30s, somewhere in that range. And a bid came in, it was literally a penny bid came in for about 10,000 of something like one strike, one handle out of the money. And they were there for a minute, and then they vanished. And the guy next to me turned to me, he was smiling, and he had the ticket, and he showed it to me. Look, and he was elbowing me, like he was really proud of himself that he hit the bid on these things. And I just looked at him, I said, you have kids. I was like, they're about to go to college. What are you doing for a penny? The Microsoft in 5 minutes, your home could be gone. What are you doing? He did them open. He didn't even, there's no spread. It was just, he just did it naked. So that was doubly bad. This at least only a buck, but yeah, this kind of brings back nightmares of that. Moral of the story, listeners, don't do this. We show you this so you too can learn from this. Be sure we got the prices out tomorrow, Mr. Rocklock. I mean, it closed at 108. The chance of this becoming anything are pretty small, but still, this is a I hope this thing gaps up now to way past 113, so you can feel some max pain here. This is a good teaching lesson for your pitch chatters, though, Mr. Rocklock. So I can see why you would pull that up. Let's switch gears to something maybe a little bit more sensible, or perhaps not. It is the odd block after all. Let's go out back into the energy sector. You can't do an odd block these days without talking something energy. We're going to go into SM Energy Co. Or maybe it's S&M. Maybe they're a little sassy. Ticker symbol SM. Closing today, $31 and some change, up about $1.75 or so, about 6%. So nice rally ho day here for S&M Energy. That's what I'm going to call them for the rest of the show. And what we saw, first off, this is a name that does about 1,500 contracts a day, doing a whopping 38,000 today. So a wee bit more than that. About nearly 17-1 puts over calls. That should tell you what caught our eye today. There was a lot of paper across the board out here. It looks like, including a size Nove put spread, 17.5, 20 put spread going up about 8,000 times. That looks like that accounted for the lion's share. A paper looks like that was closing too, it's about 8,000 open. But that isn't what caught our eye. No, listeners, there were some other puts, in particular, a lot closer to home. It was the AUG 25 puts. These bad boys now out of the money, far out of the money. We saw initially a few hundred of these going up. Looks like paper picking them up for about 30 cents. As the day went on, over 2,000 going up on this strike. Paper paying a variety of prices. They went out about at 25 cents. So that initial 30 kind maybe stinging a little bit. Looks like someone, either a long stockholder who's a little bit nervous south of the 25 strike, or perhaps someone saying this initial run-up is a wee bit overdone. Looking back at the year that was here out in S&M, and they have had a nice little juicy pop-up just recently with their earnings back on the 3rd. They gapped up from about 26 all the way up to about the 30 handle. So you could see why maybe that 25 strike may be resonating in some people's minds right now. Only about 900 contracts open. So this is closing, this is opening. This is not someone closing out some paper. Mr. Rock Lobster, what's your thoughts here on these somewhat immediate downside puts here in S&M?
Yeah, I mean, you think about it, you really want to buy those puts?
I can tell you that was me. I'm sorry. I'm the odd block candidate today. That was me.
I'm just okay. They're the August quarter puts. I mean, the stock was $7 in February. It's 31 now. Who knows what's going on with the asset plays in this space? I think for stocks that really have potential to move and make you money for the rest of the year, I'm not quite, I don't know which direction they're going, but there's still a lot of pent up. Any one of these, there's so many of them out there, and there's a lot of paper like this in and around, just like weird paper. There's the put roll came much later, but somebody I think really wanted to sell those puts for a quarter. And I'm trying to still figure out what drove the bid. I didn't see any earnings. You want to pay, 90 vol for the August quarter puts in here. It's just really, really strange. Really strange. So anyway, I think it's all a little bit goofy. Goofyville.
I think your dog thinks it's strange too. He doesn't like this odd block candidate. So let's move on into our final one here, lest we irritate your dog further. This is, again, out in the, this time closing out here in the resources camp. This is Targa Resources Corp, ticker symbol TRGP. TRGP, closing today about $42 and a few cents, up about nearly 2% on the day. This is the name that does about 2,500 contracts a day, doing nearly 20,000 today, or about 48 to 1 calls over puts that will draw your attention to what caught our attention out here today. If you want to find the paper, you got to scroll on out to September, where we looked at, looks like a bit of a funky ratio vertical out here. It was the SEP 44-46 call spread going up, looks like 2,000 by 3,000, so a bit of a ratio, 5,000 contracts total. Looks like paper blasting out the 44s and then buying the 46s. At that ratio with those prices, it did it for a buck and 2.5 cents and then $1.50. At those ratios, it comes out to a slight, let me emphasize the slight credit there. So this is a bit of a, we've seen a lot of 1x2s, short 1x2s out there in VIX land. This is a 2x3, short 2x3 out here in Targa Resources land. No open interest to speak of on either of these names. So either our friend here is looking for that moderate credit, but probably chances are not. He's probably really looking for this thing to explode to the upside to make some actual money, which is how these types of ratio verticals tend to pay out when they do. Looking back at TRGP, it has had a bit of an upward trajectory. This year alone, it's pretty much doubled or close to it. It was printing back in the teens back in, again, when the market was really turbulent back in February, when not a lot of people loving the resource names. Since then has been on quite a tear. Like I said, closing today, $42, up another 2% again today. So I don't know, Mr. Rocklops, our friend here seems maybe perhaps convinced or poised to think that TRGP, the best is not behind them, unless you think he's just coming here to carve out some garbage credits. Where do you fall on this one?
Well, yeah, he's either making a nickel or...
Hey, he's 5X what the Apple guy is, so he's already a genius.
Exactly. But at least he has till September. He's holding that trade till September. But ultimately, like I said, I saw lots of, strange but sizable paper looking for some funky things happening, especially a lot of the natural gas explorer producers, stuff like that. Not so much in the majors, but really in, like, all of a sudden we're going to get some pop in oil prices or something. I mean, just there's just some straight trade construction going on here. That's what we had. So, but you need $50 in this. I mean, is the thing going to go to $50? Targa Resources. I guess it
already has doubled in the last 4 or so months. So I guess he thinks the party ain't over. And maybe
Why
the
not?
Party
on, Wayne.
Yeah, exactly. I like the notion he's doing all this for a nickel. That's my favorite. That'd be my favorite outcome here. I really wanted that nickel, and I'm doing 5,000. He really loves his broker. Todd, you must love these trades. These are what Andrew and I jokingly refer to as the love your broker trades. When they come in and do a ton of contracts for some nominal amount of premium, like a nickel or maybe a penny in the case of Apple.
To be fair, I got to remind you, Option Monster is very separate than Options House. So Option Monster, this doesn't help Option Monster at all. We're affiliated with Options House through a parent organization, but yeah, I want to make it clear that I'm definitely
we'll
not the broker
amend that
here.
to love your strategy, research, and analysis firm. How's
there
that?
We
there
go.
There we go.
And your strategy, research, and analysis firm would not recommend doing things for very tiny credits.
Yes, kind of a theme today. And since we're talking strategy, let's keep on rolling. It's Monday. It means it's time for the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the strategy block.
All right, everybody, welcome to the Strategy Block. It's Monday. That means it's time for Uncle Mike to come on down from the mountain, stone tablet, and smoking jacket in hand, perhaps sitting by a nice roaring fire with the AC on, as he is wont to do in August in St. Charles, where he attempts to dispense some options, wit, and or wisdom. Uncle Mike, I haven't had a chance to check in with my minions. They're too busy hanging out with Todd over here. They're having a grand old time drinking coffee and trying on various Options Insider outfits, and of course, wearing the derbies and the fedoras from before. So they're having a good time over here. So before I go join the party, Uncle Mike, I did hear a little bit of whisper, something about money management, maybe something to do with trading. I couldn't hear all that put together. It was kind of fragments. They speak kind of gibberish, so they're kind of high on jam and jelly right now. So what do you got cooking for us today, sir?
this is going to be a 3-for-1 strategy block. Money management's going to be the main topic, but I got 2 others that I want to go through just based upon some things that happened today. The first one, I'm just adding to the strategy block just based on the Apple trade alone. That is the dumbest trade that we have gone through all year on the odd block, and in my opinion anyway. And so I just want to say that selective hearing is what often gets people into trades like this. You could make a case, and I'm just looking at this trade, of what the probability is of this trade being successful. And I'm looking at this trade, and the delta on this is probably for the 113. Let's see, this is the 113, 114, I believe he said. We're looking at the 113. The delta on that is a 3. So that means, in theory, I don't want to get into probabilities, and you can look on a probability calculator, but in looking at this, you could probably make a case that this is a 97% chance that this is going to be a successful trade. Well, here's the deal, folks. 97% is not 100%. And if you consistently do trades like this, that one time that it burns you, you're going to get burned real badly, and it's going to hurt, and you're going to go belly up. So unless you're doing a one lot, which this guy was obviously not doing, this is something to stay away from, even if it is a one lot. This is just the dumbest trade of the year. And if you're trying to play something like this for a penny, you're asking for trouble. Now, if you want to get closer to the money and do like maybe a 108 or a 109, 110, a 108, 109, you have a plan of attack of how you can adjust it and where you're going to take a profit. That's one thing. But this is one to where you can't adjust a penny. That's just ridiculous. So don't have selective hearing. Second thing that I want to go through on today is we talk about yield and how everybody wants income and yield. And I just want to go through just one thing that I tell my clients that came up today, just quoting someone a life insurance policy for a term life. I do occasional life insurance stuff, but the way with which he's going to get a guaranteed 4% rate of return on his investment is just by paying for his insurance premium annually instead of monthly. By doing that, a lot of times you can benefit from that, and that's a way with which you can achieve yield. Ultimately, when people are looking for yield, they're thinking, okay, I'll buy a bond, it'll pay me 4%, 6%, 5%, whatever, and it's something to where it's guaranteed to pay so long as the company doesn't go bankrupt. Well, those are extremely difficult to find these days, especially with rates as low as they are. So the way with which I'm telling my clients to get creative is if you have a car loan out there, you're paying 7% on that car loan. Right there, there's a guaranteed 7%. If you have any credit card debt and it's charging you 9 to 12%, there's no reason for you to be looking for yield. You already have yield. It's the best yield you can get. Now, once again, I'm not trying to make light of debt, but if you do have some type of debt and you have the ability to pay it down and you're looking for yield, right there can be the bond section of your portfolio. Now, on to what I wanted to talk about today, and that's money management. I just kind of want to throw something out here that you could use. Some people use it in casino betting. Some people use it in trading. But I just want to go through a way of managing money with which to possibly use with your trading. Now, first assumption, we're going to do double or nothing trades. You're either going to, on the trade itself, you're going to either make 100% or you're going to lose 100%. Now, with this, you're going to have to modify this for your own trading because sometimes people are looking to make 5%, 10%, whatever, or lose 5%, 10%. So you can modify this, but in the interest of keeping things simple for the trade, for this example, we're going to assume either 100% gain or 100% loss on the trade. All right, let's start off with 10 units. Now, what can a unit be? A unit can be $100, a unit can be $1,000, whatever the case may be. In your trading account, you have 10 units. So what I'm proposing is for the first trade, you bet 1 unit. In that, let's say that you just have $1,000 in your trading account, you put $100 on the table. And if you lose $100. You still have 90% of your trading capital with you. Now, that might be a little bit much, but either way, modify this for your own trading. I'm just making this so that I'm using the going in tens because it's simple math. Now, until you actually are ahead, just keep betting your 1 unit. And then after you lose 10 in a row, well, you're done. That's the way it is. Then you don't have a really good trading plan. Then you really need to call Andrew for some help on that. But after you win one, after you're actually ahead, what I would propose doing, something to consider, adding a unit to it. So trade number one, you win. You're 1 unit ahead. You're $1,000 ahead in your $10,000 account. Trade number two, bet $2,000. Now, by doing that, what's going to happen is if you lose on that, well, you're back down to $9,000. Not a lot, not fun by any means, but when doing so, I would propose going back to 1 unit until you're ahead. Never add money to your trades until you're ahead. So let's say that we win a few in a row. After the first one, we win. We're ahead $1,000. So the second trade, we're going to bet $2,000. We're ahead $100. I'm sorry, $1,000 account. We're ahead $100. Let's just go with $1,000 and $100 a trade. Sorry. So we're ahead $100. Now we're going to bet $200. We win again. Following trade, we're going to up this to 3 units, $300. We win again. We're going to bet 4 units in the fourth trade. And at that stage, we can continue to go with 4 units, and you can up this in units. But my point is this is a way with which you can make money by using the house's money. And you're using this when you're on a roll, you're adding to what you're using. Now, bottom line to this strategy is that if you're down money, when you're below your $1,000 entry, when your account's in the red, don't add to the units. Don't try and add to it to get well, so to speak. But as you go, add a little bit, and then by doing so, you're risking more, but you're doing it on the house's money. Once you get to 4 units at that stage, a lot of times what I would recommend doing would be to go back to 1 unit and start over again. Take some off the table and live to trade another day in case you're wrong, which you will be at some point. The bottom line is that if you do get on a roll, this is a way to make a lot more money than you normally would. And if you're down, you're really not going to lose that much more if you're down. So with that being said, this is something to where what I'll look at is I'll take a $100,000 account and then take maybe 5 to 10,000 of it to be the higher risk section of the account. And then the remainder of it will be in the boring section, so to speak, which is something I've always done my entire career. But by adding the contracts in smaller amounts like this is a way with which you can use numbers in your favor when you get on a roll. But the bottom line is that if you're ever in the red, do not add any amount to the amount of contracts with which you are trading. Make sure you're using your lowest amount and don't add money to try to get well. You can if you want, but I would not recommend doing so, and I never have, and I never do. Can't say I never have, but it's something that I haven't done so in many, 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 many years. So with that, that is the strategy for today.
Thank you for that, Uncle Mike. A little bit of a hodgepodge, a grab bag, if you will. So pick your poison and dive right in. We'll keep on going. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, welcome to Around the Block. This is like the man said, where we tell you what we're watching for the rest of the week. Before we do that, really quickly, I just want to do a quick segue into our question of the week. Our results from last week, you guys, everyone, I think it was Steve and you guys, Andrew, I think Mark as well, and Mike all picked other things. I picked other things like platform. We asked you what's most important to you in choosing an options broker, but at the end of the day, our audience was all commissions all the time, 56%. Choosing the commissions, about a third platform, so we can get behind those guys. Only 3%, Uncle Mike, feeling your love for support, so maybe you got to talk to those people. And about 9% educational offerings. So a surprising breakdown. Commissions got out to an early lead. Other parts kind of rallied for a while there, but it seems like that early lead was insurmountable. This week, our question is, what is your preferred way to trade crude oil? We got WTI options and futures, USO options and ETF, XLE options and ETF, or Brent options and ETFs. And I'll just give you guys, again, it just came out earlier today, so it's only been up for like an hour or two. So the numbers are still preliminary, but so far, Uncle Mike, I hate to break it to you, but your beloved XLE getting no love, 0% for XLE. We got about a third for WTI. We got over half, 57% for USO, and about 7% Brent. So Brent smoking XLE. Does that surprise you, Uncle Mike?
No, it does. I mean, for trading, if you want to trade oil, I think trade oil. My answer for trading oil would be just to do crude. What I'm trying to do with XLE, it's a 5-year holding that I'm sitting on. Unless it like triples tomorrow or something, then I'll quickly make it a 1-day holding. But no, for trading crude, I think that if you're going to trade crude, trade crude. That's what I would say.
Yeah, our listeners tend to agree with a lot of them wanting WTI or the ETF equivalent out there, or not equivalent, but tries to be in USO. We'll see how those numbers shake up again. Just started today. We got the rest of the week, so make your voices heard over there at Options on Twitter. Now, of course, Around the Block tell you what we're keeping an eye on for, and it's kind of a bit of a quiet week. Earnings kind of winding down. We got some retail sales on the 12th coming up. We got jobless claims. In terms of earnings, there are still a few names. Disney. We talked about Disney earlier. Disney coming out tomorrow. That'll be an interesting one to watch. They've had this interesting kind of push-pull going on where so many parts of their business are doing well. Star Wars, the parks, everything else, the movies. But then there's one big part of ESPN kind of dragging on it. So kind of that push-pull has been going on for a while. I got Exelon and Coach, as well as our friends Valeant, like we mentioned earlier. On Wednesday, we've got Ralph Lauren and Shake Shack. I know Rock Lobster's favorite, as well as Thursday, Alibaba, Kohls, and Friday, good old JCPenney's. A lot of retailers out there. That said, you're in studio, Todd, so you get pride of place. Any of these catching your eye, or if not those, I know it's a bit of a quiet week. Anything else on your radar for the rest of this trading week, sir?
Outside of the individual names when they've got their earnings, is what's going on in the retail sector. And with retail sales coming out on Friday, it'll be interesting to see if retail customers are spending some money. And I think that'll give us an idea, too, of disposable income, middle America. I know everyone always looks at corporate earnings, and we've got these earnings cycles, and we keep looking at, what's expected in their earnings and their revenues, and they keep on lowering expectations. And, great, they exceed them, and they run the stock up. But I think the real health of the economy is, are people able to afford things? And so I'm watching retail sales.
Mr. Rock Lobster, what's catching your eye for the rest of this week, sir?
I am trying to decide if the VIX can close below 11. I'm thinking yes at this point. I don't want to spend a ton of money on it, but the reality is you got low interest rates, you have some jobs, you have the Brexit thing, which was a major problem, and now it's kind of not. Again, what was that? That was 2,000 in the SPX, right? So, and we're at a 2180. So the market, at least, while there is a wash of liquidity, is still going to go up. I don't know how long it goes up, but it's going to keep going up. And after every time it seems we have one of these macro issues that seems to freak people out, and when they pull the plug, it's very fast. But for the most part, it just feels like we're going to sort of just keep grinding up, and that grind is going to keep putting pressure on volatility. So as long as they go hand in hand, I'm going to stay out of the way.
All right, and last but not least, Uncle Mike, take us home, sir. What's catching your attention? What's catching your eye for the rest of this week, sir?
Climbing the wall of worry in the stock market. We just keep kind of grinding up there. Today was pretty much nothing happened. It's down a couple points in the SPX, but watching that, and I want to watch also bonds. I want to see if we get some type of a pullback in TLT or an IEF. We really have not had that throughout this rally, so I want to see if we can go down maybe 5 or 10 points in bonds to see if bonds might be leading the way. So yes, we are at a rally. We are making all-time highs, folks, but don't forget about the bonds.
All right, listeners, that music means we've come to the end of yet another fun journey through the world of options. But before we go, one last time, let's go back around the horn, checking in with each of my cohorts, my partners in crime here on the old All-Star panel, see what they got cooking. That may interest you. We'll go in order of proximity one last time. That means, Todd, you get pride of place yet again as the guest. He perks up right away. I love it. Todd, what's cooking over there in the land of all things strategy, research, and analysis and scanning over there in Options Monster?
Well, a lot of what was discussed today, everyone's out there wanting to know individual names. Well, when is their earnings? How did they perform in the last over the last year? And being able to go back in a very easily, fast, quick, digestible way, see how a particular company's been performing, as well as knowing when those earnings are, what's coming up, when what financial announcements are coming out, what the markets are expecting to see. You need some research, you need some analytics, you need some market commentary, you need some trade ideas. Come to optionmonster.com. We've got it all for you.
There you go, listeners. Optionmonster.com to learn more. And back out in order of proximity, Uncle Mike, what's cooking in the land of all things RCM?
Well, if you are looking for a financial advisor who is not afraid of the word option, or bonds for that matter, feel free to give me a call. I will work with people for as low as a couple $100 a month. I can scale myself because of the fact that most of my clients are online. Give me a call, 312-212-3531, or shoot me an email at mtosaw@rcmfs.com.
And last but certainly not least, when you're not busy staycationing and fishing out there, Mr. Rock Lobster, what's cooking in the land of the pit?
We have another webinar August 27th, I believe.
Shocking. I can't believe you have another webinar. I don't find it hard to believe, sir.
Everybody loved the last one on commodity options, by the way. It was, you know what? It was awesome.
The first for you.
August 27th.
That was the first for you guys, right? Commodity options. You haven't done that before.
It was. It was guest hosted, and people loved it. Kevin was great. So he knows what he's talking about, which is what we try to find. I know this is crazy, but people that know what they're talking about. Anyway, we will be discussing weeklies, how to trade weeklies on our next Saturday webinar. And for all Option Pit clients that are Option Pit Live and above, it is free. That's almost as inexpensive as Tosaw's book. But if you're a new client, you got to pay money. But you can use that money against any other Option Pit products in the future. That's how confident we are that you will stay with us.
All right. Nothing's as cheap as Tosaw's book, but it's pretty close. $3 out there. $2.99, listeners. Grab it if you haven't done so yet. Go long. I think you'll like it. And on behalf of the aforementioned Uncle Mike and the Rock Lobster, and indeed myself, as well as Mr. Todd over there filling the Option Monster hot seat this week, and indeed myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the show, and of course, for joining us live. We love you guys as well, and we'll see you back here Thursday, 3 p.m. Central, 4 p.m. Eastern for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.